I mean, as Damodaran has said, it's more of an art than a science, right? Up to at times it becomes about it's subjective, and it's your ability to understand that business. How would you price that business that is important? Typically in a firm, suppose 30% is owned by a fund, 70% is owned by a promoter. Promoter wants to sell the company, the fund does not want to sell the company right now. He wants to wait for 2 or 3 years, or does not want to. Promoter wants to take the company for an IPO. The fund wants to do a strategic exit to another PE fund. So there are different ways. So the ability to navigate through these is what a true advisor, and obviously giving benefit to all, bringing all the parties together, finding structures, finding ways in which things can be done, finding what would be the most efficient way to do it, finding global examples for that, Indian examples for that is what all are a part of our tactics. See, deep inside, I knew that if I build value for myself in the next 2 years to come, right? Today, the world values you for your or the knowledge that you bring in, right?
Welcome everyone to the fourth episode of Fincast. In this episode, we are delighted to bring to you Keshav Rathi. He is a graduate of PGP Fin 01 from IIM Kozhikode, batch of 2022. He did his undergraduation from the esteemed Sriram College of Commerce, and post that he's worked with Cube Highways and Infrastructure for 3 years. He's also cleared 2 levels of CFA and C intermediate examinations. He has made significant strides in the field of investment banking and is currently working as an associate with DC Advisors. Prior to this, he's worked with Upward Capital and Rothschild in the healthcare and consumer sector.
He interned in Goldman Sachs investment banking division during his summers. Known as the urban finance legend amongst his peers, Keshav was a member of FY, Aditya Birla Scholar nominee, and national finalist in multiple case competitions. A mentor to many and friend to all, Keshav created a distinct legacy for himself in IIMK and is currently on a mission to navigate through the nitty-gritties of finance, leveraging his broad and diverse network that he has created. Welcome, Keshav.
Hey,
Welcome.
thanks a lot for the very sweet and nice introduction. Although, I mean, a lot of it is kind of overinflated, but yeah, thank you so much.
So, Keshav, to start with, can you walk us through your journey at IIM Kozhikode and post that how investment banking happened, how you are enjoying investment banking, how stressful is it, and right through your journey.
Yeah, you can see a lot more dark circles in my eyes, so which means that it is very stressful. I mean, but yeah, I mean, one thing that kind of not just with me but others, my friends, etc., which kind of brings us a smile even now are our days at IIM Kozhikode. So IIM Kozhikode was, to be honest, one of the two of the most fulfilling years in my personal as well as professional life till now. I mean, I always had interest in finance, and when I did get the opportunity to kind of be a part of the first flagship finance-focused program at IIM Kozhikode, I kind of, although a little, worried because it was COVID at that time and it was a new program that we are starting, but with a lot of assurance from, our professors and alumni. I mean, me and a few of my friends who are now people that I'm very close to. We took to PGP Finance, and that was a very, very well crafted program. I mean, you kind of learn about strategy, you learn about marketing, you learn about a lot of things, but there's a tinge of finance to everything that you study. So that attracted us. I mean, that is the first time, I kind of read about things in especially on the markets, public market side of things. I read about things in theory while I was at college, undergrad, at CFA, etc. But that is the first time when being a part of a community of like-minded people staying together, working together, reading about stocks, reading about companies, reading about businesses, etc. That was a different experience altogether. And and I am Goikod also being a part of Financially Yours, wherein we used to speak with alumni, wherein we used to publish equity research reports. All of these things, I think, kind of made me sure about, this is something that I really wanted to do. And obviously, the things that I learned from here, the people that I met over here, kind of helped me in my journey in innocent banking till now. So, yeah, that's how the journey has been.
Okay. Keshav, there are multiple investment banks in India and there are multiple roles in these banks. But
Yep.
before we start, it would be helpful to get a landscape on various types of investment banks and roles in India and what we should target for.
Got it. I think that's an interesting question because today there are so many different banks that are there. A lot of advisors call them banks. A lot of banks call them advisors, etc. So it's important to kind of understand the uh, landscape. So yeah. So I mean, investment banking in India or globally as well. I mean, just talking about the function, it's divided into two or three broad parts, right? The first one would be the M&A side of things, wherein you're helping companies get acquired. The second one is that you're helping companies in raising private capital. And the third one is that you're raising companies in getting public capital. These are three broad functions, and there are other things as well, debt advisory, but we'll focus on the three main parts of banking because this is the core bread and butter for most investment banks. So typically, as a size of, I mean, as bigger banks tend to do bigger transactions. So you can see a complete legacy of complete, perpetuity of banks which are going higher. So there are banks. So about who are the top banks in India? So the top banks in India are typically the global ones who are working in India. So these are the one banks that do the typical 1 billion Flipkart, Walmart, or Reliance Jio kind of transaction. So over here you will have a Morgan Stanley, a JP Morgan, a GS, uh, and the likes of these. These banks also tend to have mid-end offices in India. These are offices that kind of work with the global offices of these banks. For example, GS used to come to our campus. So the GS Bangalore office used to work with the GS US, UK, and other offices to support them in the deals. And as the time comes, you know, people tend to move to these banks. So similarly, there are mid-end roles such as Nomura, JP Morgan, HSBC, etc. So this is the first cohort of banks. The second cohort of banks is what is typically, these are called the bulge bracket banks in common parlance. The second cohort of banks would be the mid-market banks. So the mid-market banks would be, banks that do say a $200 million, 500 million, less than $500 million kind of deal on a regular basis. So for that, you'll have banks such as a Rothschild, a DC Advisory, and Indian banks such as an Avendus, and O3 Capital, etc. And then there are boutique banks, right? For example, a Unitas, a Spark. I'm not to that extent. These do deals which are typically lesser than say $100 million of raise, and in that also there are Indian banks. So this is typically the M&A or the private fundraise side of things, and then there is a public public side of things, which is equity capital markets, wherein helping companies go for IPO. So typically, you over here you will also see some bifurcation, but over here you'll see the Indian banks that are very very active. For example, Axis Bank, GM Financial, etc., Kotak for that matter,
Mhm.
and also there are global banks as well. So this is typically how the structure is look like. Uh, and for an IIM core pass out, I mean, given as a fresher, I think of one good opportunity that comes in over here is kind of getting into one of the, I mean, two or three of these roles can be kind of good for them. First one would be, say, getting into a mid-end office of a GS or a JP Morgan and trying to get on the job skills as to how banking is done. Obviously, you'll not be the face of the transaction, but you'll be supporting them, but you'll be learning a lot and then kind of transitioning either to the front office abroad or kind of transitioning to a role in India. Second would be, say, a mid-market kind of a bank, for example, an O3 capital kind of a bank, wherein, kind of, which are more open to take people who are say a little less inexperienced and kind of train them, etc. And then there'll be ECM houses, such as Axis, etc. Obviously, the bulge brackets opportunities, there are like limited roles in those in them. So getting over there is difficult. But yeah, it's possible if kind of, if you kind of put in the right effort in those
Mhm.
directions. Yeah.
Got it, got it. That was really insightful. So moving on. So what is a day typically in an investment banking firm across the management hierarchy? So I think there are multiple roles as an analyst, associate,
Yep.
director, vice,
Yes.
and so on and so forth. So what is a typical day in an investment banking firm like for all of these, and what's their mindset like?
Sure. I mean, So see, typically, the revenue for an investment bank is generated by the deals that they close at the end of the day. So the typical mindset of a firm would be to kind of add value to clients, add value to to various companies, businesses, etc., and kind of help them do a transaction that'll help them not just immediately but in the long run as well. So that is where the ultimate thing is, right? Advising right, be it an M&A situation, finding the right buyer for them, advising right, be it an IPO, kind of finding who would be the right, institutions to go to, what would be the right way in which, because people at banks typically they have a strategic point of view. They have been looking at businesses from a lot of lenses, right? So sometimes what a investment banker would know about a company, or the manner in which an investment bank thinks about a company, is typically at times what a promoter would also not think, even though he's on the job, he's executing. But the strategic point of view, this is how globally the ecosystem has been planning out. These are the global this is the global counterparts or benchmarks they've done. So and then kind of finding out the right valuation. So that is the overall mindset of an investment banking firm, right? And how does it flow is that everybody's kind of working towards that direction to kind of give the right client the right advice, and also finding more clients to kind of engage with. However, the work kind of differs from level to level. So typically at an analyst or an associate kind of a level, wherein you are just into the organization, your work would be to learn, and also b at the same time do a lot of, you have to do a lot of heavy lifting on the execution bit, right? So basically making those collaterals, doing that research, making the financial model, kind of and as you start to grow more and more into the system, trying to do a lot of project management, uh, navigating through deal complexities, shareholder, stakeholder management, etc. As you kind of grow higher, you're supposed to kind of be equipped with these basic things, and then kind of become master of more things, that is, deal strategy, deal tactics, deal negotiations, etc., documentation. So that is how you kind of grow. And as you kind of become the MD, as an MD typically are handling three to four projects, right? On an average basis. So what happens is that you have to uh, be atop with what is happening in deals, you need to understand what is happening in the market, be in touch with the promoters, be in touch with the clients, do a lot of business development, and also kind of add value by kind of giving strategic insights and direction to the entire project. So this is typically how broadly our team works like.
Keshav, you mentioned about deal negotiation and deal tactics. Can you
Yeah.
elaborate on that a little bit more?
So, to elaborate on it, probably you need to have, for a case-to-case example, right? For example, a deal tactics can. So basically, so see, ultimately, as I've said, ultimately it's about getting the right buyer or the right investor, or if you're doing a strategic advisory, trying to get a foot into that investment opportunity is something that you have to do. Obviously it's a long process, a lot of smart minds, a lot of people who have their own way of thinking, and rightfully so. Everybody comes from a different point of view, right? So deal tactics would involve, kind of on a very practical basis. It will involve, as how to get my deal done. Probably if there's, suppose, and you've worked very hard for a transaction. So the things that we're studying, valuation, collaterals, IMM, all of these things are one part. But ultimately, what happens on the ground level is that a deal might not work out for whatever reason, what it may be. For example, you want to sell a company, you want a company, a founder wants to sell a company to a strategic investor, or a founder wants to raise capital from a strategic investor. And for example, his revenue is concentrated with one client, which kind of contributes to 40-50%, and that client is not comfortable with the change in management of the company. So even though the founder wants to sell, the investor wants to invest, the client is not ready, and the client might back out. So this is a typically precarious situation. In one cannot expect it. And then there are such deal nuances everywhere. So the ability to navigate through these things and to find a common ground for all three people on the table, right, is what a part of uh is what can be the thing. For example, there are other tactics as well. The promoter, typically in a firm, suppose 30% is owned by a fund, 70% is owned by a promoter. Promoter wants to sell the company, the fund does not want to sell the company right now. He wants to wait for 2 or 3 years, or does not want to. Promoter wants to take the company for an IPO. The fund wants to do a strategic exit to another PE fund. So there are different ways. So the ability to navigate through these is what a true advisor, and obviously giving benefit to all, bringing all the parties together, finding structures, finding ways in which things can be done, finding what would be the most efficient way to do it, finding global examples for that, Indian examples for that is what all are a part of our tactics.
Mm. Yeah, that's a very insightful answer, Keshav. So, and in case of any M&A deal, how do you identify the target or acquiring company, and what is the approach that you follow, and how do you convince them to sell their stake?
So it's both ways. I think typically what is more prevalent in India is the sell side advisory, wherein bankers are helping companies in finding a buyer for them. So it can be a strategic buyer, it can be a financial buyer. So a financial buyer typically would be, so for example, if you look at funds, there are different types of funds in India. There can be a buyout fund, which kind of takes a significant stake in the company and then, kind of runs change, can kind of gets a professional management and runs the company and then kind of exits it. For example, over here, you'll have the likes of a Blackstone, for example, that had invested in Soma, a KKR, Max Hospital, Advent, etc., etc. So the global ones, and then there are Indian ones as well, Samara, etc. So this is one part of the thing. The second one would be growth investors, who kind of enter into the journey, help a company scale up, and then kind of uh, mm, take it to the IPO or things like that. And then there are other VC investors. So basically, if I'm looking for a company, for example, just give me a company, for example, I'll just tell you how probably we can do it. Any kind of sector or any kind of company.
So talking about recent ones, so let's talk about Reliance and Jio.
Reliance and Jio would be very big. I mean, something. Oh, okay. If we talk about Reliance and Jio as well, okay. For example, if you look at a Jio, right? So typically in the Geo, suppose there was smaller version of Geo because Geo in itself is a large company. But if you
Mhm.
have to go for a Geo, so you look at this is how you bifurcate. So if you're looking for buyers, you'll bifurcate into two parts. One would be a strategic buyer, which would be a company acquiring a smaller company, and then there would be financial buyers. So the financial buyers over here, as I've told you have to bucket it. This is the amount of capital that my company needs. This is a ticket size that investors are ready to buy in, and these are sectors of preference for investors. That is fair enough, and probably that is some insight. You can get some insight over here. Secondly, in terms of trade buyers, what you'll do is that you look at companies which are there in the same sector, or companies which are trying to acquire companies in the same sector, trying to build presence in the same sector, global companies that are there in the sector who want to say come to India to acquire it, right? So you have to find companies who are in the similar space, who are acquisitive as a part of the inorganic growth, and at the same time have want to invest in India to some extent. So these are like three or four buckets, and then you will probably shortlist them. You'll kind of reach out to them, send them collaterals, etc., and that is how it happens. For a on the question that you asked for a buy side mandate, for example, if I am going to a chemical company, right? A chemical company, suppose one part of the value chain. So in the chemical company, there can be, for example, it can be manufacturing raw materials or APIs. It can be manufacturing the final dosage form, which is formulations. It can be wanting to do a contract manufacturing. So there are different places that it wants to play in, right? So, for example, a company decides today, okay, I am doing this. I want to backward integrate, and I want to go to an API kind of a business. So, or a technicals kind of a business. So what I'll do is, I'll try to find those small targets for them, for example, which they can acquire to kind of get a factory running. So that is how it works. So that is where, and then you reach out to them, you kind of discuss with them, this is that company that is interested in you. You want to strike a deal with them, and then kind of take the thing forward. So this is typically how a buy side and a sell side M&A process runs.
Got it, got it. I think that was really insightful. So, while you were mentioning about IPO, So IPO pricing has always intrigued me. I remember a few years back, Mamaearth had to face a lot of brash
Yeah.
from the public because of
High
apparently it
valuation.
had a lot of high valuation. The
Yep.
prices were too high. And similarly, as we go on into an IPO frenzy,
Yep.
companies like First Cry, Ola Electric are
Yep.
coming out with their IPOs. So
Yeah.
typically, how is the pricing or how is the range of prices decided for retail investors to invest in IPO? And same for the institutional investors. So whatever we see about the oversubscription on the IPOs, I know that's all mostly on the front end. On the back side, there's a lot of work going on by the investment bankers convincing these institutional investors. So what's the
Yeah.
process and the deal like with them?
What's the progress and the
Process and the deal like with them.
process and the deal like with that? Got it. So, I mean, valuations, see how things kind of work is that, I mean, a lot of the valuations that happen are, I mean, we've studied about it as well, is, I mean, in practical parlance, a lot of the valuation that takes place is kind of doing a benchmarking of companies basis some ratios, such as EV to EBITDA, or a price to earnings ratio, etc. That is the first bit, and I think at least in the places that I found, that is a very kind of common parlance to kind of do because that's intuitive and more practical. And then there is a DCF wherein you kind of value the cash flow of the company and kind of do things forward. So I mean, if I have to suppose go for the IPO of suppose I mean, first for example, if you said about Mamaearth or Ola Electric or First Right. So what I'll do is that so typically how benchmarking is done is that basically I firstly firm up on my sales and my EBITDA number, and then there's a multiple that is given to it. And to find those multiples, I kind of do a benchmark of companies. For example, if I'm doing it for an Ola Electric today. So what I'll do is that I'll kind of create buckets of kind of, investments. For example, we'll find what are the global, motorbike companies trading at, right? What are the global EV companies they're trading at?
Mhm.
And then in India, if there is any kind of what would be the closest proxy to an Ola Electric? Which are those companies that are there in electric vehicles? Which are those, and then which how are the tech-oriented companies getting valued at? So the first thing that is to be done is to find the I mean, the broad fundamental which is there in the market is that typically, ceteris paribus, valuations are fair. Obviously, in India right now, valuations are a little higher,
Mhm.
than how it is. But typically, you can just take it as a proxy. For example, if I know that this company is trading at an EV to EBITDA of suppose 10x or 20x or 30x, I can understand, okay. And I look at those 5-10 companies that are there in that sector. If they are trading at that level, I get an understanding, okay, markets are valuing this kind of company at this level. And you have to find out these companies and see how they're valued at. This is like the first way. And to get first level analysis, okay, I understand. At the same time, you will also look at, in case of an IPO and otherwise also, you look at how private transactions have been valued in this. I mean, the thing that you've studied as a precedent transaction analysis, right? This is the
Mhm.
second thing that we look at.
Mhm.
Yeah. For example, if suppose Ola Electric was valued at in the previous round, it was valued at 4.2. Right now, it's kind of 4, whatever. So you look at how, or example, how was Ether valued at? So this is secondly the things that we look at over here, and then obviously there are other things as well. For example, in this case, a DCF might not be relevant because the company might not be, as might not have the financials or unit economics right now as it might be, but typically you look at that as well. But I think the first bit of it is very important. Obviously, you after you do, once you have set a once you've set a broad price level, right? Then you go to the investors. You kind of obviously there's a filing of RHP, etc. But you do a soft check and a roadshow with investors to do the price discovery of the asset to understand how can my asset be priced at. You go to investors. Investors give you a value. You kind of give a value, and then speak to 10 investors who at the same time are speaking to 10 companies. So you go to the market and you identify what is the price for me. Once I identify what is the price for me, for example, Ola to take a little bit of cut in its price, right? Once it understood, okay, markets are not giving me that.
Mhm.
So you get those anchor investors, and once those anchor investors are betting on those prices, retail investors typically tend to rely on what are the prices given by. For example, if there's a ACOM's DRHP, ACOM's IPO, which kind of which is open right now, it's going to be listed. For example, if I see a fund is in HSBC investing in it and etc. and good institutional holding, that'll give me some comfort, etc. That is typically how it does. At the same time, we do our own research as well to get us if it's trading at a 21 times EV to EBITDA, what is right, what is not right, all of those things.
Hmm. So, Keshav, so continue on the valuation part. So, uh, various methodologies give you different valuations. Like, let's say the valuation that you get from DCF may be different from the valuation that you get from relative. So, how do you get, and apart from that, we use lots of assumptions to arrive at the value. So
Yep.
how do you handle these things, and how do you convince your assumptions are right, and how do you come to a consensus?
I mean, as Damodaran has said, it's more of an art than a science, right? As he told. So, I mean, I kind of rely at times when I feel I just kind of rely on what Professor Damodaran has said. I mean, obviously there are different viewpoints, people say different things, but ultimately a consensus, it depends on, see, practically how are the other companies trading at, what is the sense of value. I mean, you also have to kind of you also have to consider the softer aspects over here, and that is where understanding of businesses becomes important, right? So example, if I look at a P to PE ratio also. I mean, we've studied that there are drivers to those PE ratio, right? There is growth, there is,
Investment.
moat to the business, there is how much return on capital is a company generating, etc. So you have to, I mean, at least, I mean, if I see that a company is overvalued, I mean, it's valued, suppose there's company one that is valued at 10x and the company two that is valued at 15x. So it is then my ability to kind of justify that valuation of 15x, and for that I have to find out what can be the right things. For example, if the company might have a very strong competitive advantage in terms of, a moated business, in terms of, say, a product where, it has a value added patented product which kind of gives it high margin. There's sufficient capacity in the business that is yet to be utilized, and the company can grow a lot forward without a lot of capex. I mean, the company has cost advantages, and where the company is playing in that value chain also. For example, if it is into an innovative side of thing, is getting return. So you have to, at times it becomes about, it's subjective, and it's your ability to understand that business. How would you price that business? That is important.
That was a very insightful answer, Keshav. So, as you were mentioning about relative valuation and the different industries that use relative valuation, so one common issue with using relative valuation is generally people are confused as to which metric or which relative valuation to use for which different industries. So, if I'll just list down a few industries and you could just mention which are the typical metrics which are used for these particular industries, it would be really helpful. So,
Sure.
starting with the SaaS industry.
So in the SaaS industry, the typically, for how the industry works, there are typical ratios. I mean, core SaaS metrics is what is kind of used typically. So, for example, these businesses are developing and they're more of B2B kind of businesses. So, for example, I mean, I want to know what is my CAC, which is my customer acquisition cost, what is my LTV, and what is my CAC to LTV ratio. I mean, I want to know about, what is my churn rate, etc. over here. And then I would want to benchmark it, suppose what is my ARR, for example, in this case, and I would want, which is the annual recurring revenue for that company, and I would want to benchmark my and I would want to benchmark my this thing to those. So these are typical ratios that are used for SaaS, and obviously then there are other ratios as well which is there, but over here these finer nuances become more important.
Got it, got it. So next is the manufacturing sector.
For the manufacturing sector, typically over here we'd use standard ratios such as, standard ratios such as EV to EBITDA. But if we kind of go a little nuanced into that, I understand we can use ratios such as, what is my tonnage capacity, what is the volume that I'm producing, and things like that. These would be metrics that will be used for a manufacturing kind of a business.
Got it. Retail sector.
Uh, for the retail sector, over here, the rental cost for retail sector is very, very high, right? So, So given that, I mean, for my, I'll not just go for a EV to EBITDA ratio. I also want to look at what is my EV to EBITDA adjusted for rent. I want to look at what is the sales that is generated per sales. What is the sales generated per square foot? All of these kind of ratios become important.
Got it. Hotel and tourism sector.
I think hotel tourism would also be a little similar. For example, over here you will go and probably hospitals also comes in over here, schools maybe over here as well. Is you want to know about uh, you know, so if I have a hotel, I would want to know. Then there are finer ratios to that, right? Just think of. I mean, ultimately, while these are like questions, the ultimate answer to this is that, and there's no right or wrong method. The ultimate
Mhm.
answer to it is that what would be the right judging factor for that company,
Mhm.
right? What would be the right metric to judge how a company is doing good? So, for example, if I am running a hotel business, what would be important for me? Something that will be important for me is that what are the number of hotels that I have? In the
Mhm.
hotels, what are the number of rooms that I have, or say
Mhm.
beds that I have, right? And what is the average length of people who are staying in that bed?
Mhm.
Average length of stay, right? On that room, right? So these are finer. What is the revenue that I'm making per bed?
Mhm.
Per room in a hospital, it's ARPA. What is the revenue made per bed, operating bed?
Mhm.
What is the capacity that I'm having? You
Mhm.
know, like if I'm running 10 hotels, how many of them are vacant at a point of time? How many of them are utilized, etc. So these things become finer in terms of understanding. So to answer in a broad way also is we have to identify what would be that right metric for me to understand whether if I am running the business, if कल को मैं अपना hotel चालू करूँ, if I am opening my hotel, what is the right thing that I look at, and then I will try to benchmark my price or my earnings to that.
Got it. Got it. And so this last sector is banking and financial institutions.
So for FS, typically, I mean, it's a little the way in which the accounting is also a little different. So over here, the net asset value, the price to book value of the company becomes very, very important. There's a ROE tree that is very, very important. So typically, that is how a banking company is kind of valued. And then in insurance, there is embedded values, there are finer nuances to that. But these become more important for a book. कितने में trade हो रहा है? What is how it is trading, and that is important.
Hmm. So, Keshav, we discussed about valuations, we discussed about metrics and competitive advantage and all these things. But to research about all these metrics and factors, we need a lot of data. So, what are the typical websites or databases that you use? And suggest some databases that are helpful for students also to research about companies and industries. And also, please enlighten us. How do you keep yourself updated about the happenings across the globe in your tight schedule?
I think out of all the questions that you've asked, this is, I think, at least at your level right now, this is one of the most important things that you can do, because getting updated with how databases work, right? See, at an analyst level, what will happen is that, a large part of your work at an analyst associate level also, at that applies to both investment banking, private equity, etc., is that a lot of your work would be to kind of get data and then analyze it and take it forward. So getting that data is very, very important, right?
Mhm.
But at the same time, at an MBA institution such as ours and other MBA institutions as well, and other things as well, we have a lot of access to a lot of databases. So getting familiar with these databases can be important. So I'm just trying to structure this entire thing so for example, if I have to search for data, so there are like 5 or 6 key databases that I have that I look forward to. And then there are other things which I'll use to be updated with the industry and things like that, right? So to know about databases, for example, if I'm looking at capital markets, right? I'm wanting to understand. I'm just giving you one good database that I find comfortable, and as accessible to IIM code and other MBA people as well, so that we can kind of be updated with that. If I'm learning about capital markets, I want to know about how public companies are, anything about a public company. For that, I think obviously there are terminals as well, Bloomberg, etc. But on a desktop basis, I find Capital IQ to be very, very nice. It's a very intuitive and a very simply made things, database wherein you can get a lot of detail and the ability to navigate through and understand Cap IQ is very, very, I mean, once you start understanding more and more, a lot of your research is kind of there only, right? This is how I learned to do my job. A lot of things that I'm wanting is kind of available at a single place. If I want to know what is segmental revenue of the company of the last 10 years, I just have to click on segment financial and I get it everywhere. And a lot of things. Or the other bit, apart from Capital IQ, I think one platform that I really like nice is Screener.in, because you can, I mean, again, that is a place. Give me a public company, I'll go to Screener, I'll type the name of the company, and I'll get everything about the company at one place in a very simple and intuitive manner. The credit rating report, the analyst presentation, the financial report, the the earnings call transcript, the shareholding pattern, how the margins have been doing, in a way in which, which is very simple to understand. That is on the public side of things. On the private side of things, obviously we've not kind of explored it, but this is something I got to understand during my job. Is there are a few databases, for example, a private circle. So a lot of these companies, in fact, all of these companies, they have to file their earnings to the Ministry of Corporate Affairs. So a company, so while you can get it done from MCA website as well, for example, databases is a private circle or a venture intelligence or a VCC edge, they kind of extrapolate these numbers. And even for example, for a private company, I can get a lot of details about them. What are the financials, board of directors, kya hai, what are the annual returns, etc. I can just kind of get it over there. So these are two databases that I'll use to understand about finances of a company. And then there are other databases as well. For example, to understand about what are the trend in the merger activities, the PE activity. There are databases called such as the merger market, venture intelligence, uh, you know, CC edge as well. So, for example, these will give me a lot of these insights, and I'll just have to click. What are the say? I have to just click deal value more than $5 million. This is sector, this is a buyer, this is a geography, whatever nuances that I want to do. You can kind of understand it through that. And then again, we have venture intelligence at our college as well, which does the same thing. I can understand who are the key players in the sector by just tagging on that sector in a venture intelligence or a private circle kind of a thing. So I think getting used to these databases is very important. So this is about the this side of it, on kind of getting information that is required to kind of be updated with information on a daily basis. The standard bit is that number A, you can go through Twitter, you can go through ET, you can go through, Mint, Venture, and then there are specialized niche things as well. For example, a VCC circle or a Deep Street Asia, and then there are long form articles. For example, again, morning context. Now there's the arc that is coming. That is one part of thing. What I also find very useful in my case, at least, is that I kind of this is something that I've inculcated. I've been trying on and off, but this is something that I've been doing actively now is to kind of be following the right journalists, following the right people on Twitter, who kind of, and also following the right thought leaders on Twitter who kind of keep publishing things. Today, if I know, suppose the US market did not do, kind of fell yesterday night because of the jobs update and everything, and because of which the NYSE fell down by 2%, and this will impact. How will this impact the markets on Monday? Or for example, there are IPOs such as ACOMs, etc., which is supposed to be listed, and there is this happening, that happening. So there is a lot of opinion that keeps on getting pushed. And today, in a digital savvy world, I think that is very important to be updated with these things. At least I have found it to be useful to be updated as to what is happening, and also getting the right opinion, and also kind of going to those links and reading what is insightful. So I think these are a few things that I think are important to me, apart from the general things that you've studied.
Got it. Got it. Thank you for this amazing answer. I think with the upcoming interviews for the SIP, the students would benefit a lot from this.
Yeah, if you kind
Uh,
of read about these things, it'll give you a lot of insights.
Makes sense. So coming back to IB, so which sector, according to you, is like the future of investment banking in terms of activeness, and you expect a lot of activity in that particular sector in the upcoming 5 or 10 years, which probably students, who want to take part in active investment banking should aim for?
Very honestly speaking, I I would not have the foresight. See, because it's very difficult to gauge which sector will do good, which sector will not do good. But then, I mean, I think every sector in, I mean, it's a cycle, honestly, right? And it just depends. Every sector, there are sectors in the financial services which are, because banks need capital, because bank needs money, they're evergreen sectors. But then there are cycles. Sometimes 2000 in 2 years back, the tech sector was booming, the startups, and today it's not. People are a little skeptical about investing in any sort of valuation, right? So it's a cycle. But I mean, for a I mean, my answer to this would be uh that we should not kind of go. I mean, we can definitely do that, but I mean, our idea would be to kind of at this level be a little, like, at least this is the approach that I followed, is be a little agnostic and try to understand about different sectors. And as and where we have opportunities, we can probably go. Obviously, there are people there's somebody who likes a healthcare sector. He kind of intuitively understands it. There's somebody who likes a tech sector. He kind of intuitively understands it. Definitely go for that. But as to keep, because this sector will do well and I invest in that, I mean, that will be judging too soon, too quick, is what I feel.
Got it, got it. So, Keshav, one last question before we wrap up. So, this is a little more on the personal note.
Yep.
So, during your introduction, you mentioned so you were a part of Fin 01. So,
Yep.
you've come from SRCC, you've got 3 years of work experience, you've got professional qualifications also behind you. So, how did you manage to get the courage to and take the plunge of joining the first batch of Fin 01? It did not have a past history. There was a PGP. You did not know how the course would do well, what would be the crowd around you, what would be the peers. So how did you take that plunge? Because I remember when I was joining in my time, even if it was a fourth batch, I had a lot of apprehensions. I spoke to, I remember, hundreds of people, but
Yep.
I still wasn't convinced until I joined and until I started attending classes, I saw my peers. So imagining doing that at a Fin 01 level is something which I cannot fathom. So how did you get that courage?
See, to be very honest, I mean, I remember speaking to, if you've spoken to 100, I'm thinking that I've spoken to at least 101. Okay. When I first came to know about the PGP Finance course, that is in Feb 2020, approximately. So I really liked the course of PGP Finance, how the subjects that were there, and the pedigree of the professors who gonna teach, etc. I mean, during my interaction, my interview of PG Finance happened with Professor Jijo and Professor Bala, who were, I think, in some ways pillars of PGP Finance. So obviously, after the interview, I kind of asked them about the course. I had a very frank discussion with them as to how things are happening. Deep inside, I knew that if I get the call somewhere, I would want to do this. But then there are a lot of questions that are there in my mind, right? But then, as days progressed, etc., there was COVID, I had time in my hand. So I spoke to my seniors who I was working with. I told them, no, this is how the course is looking like. And, these are the five apprehensions. So deep inside, in the way in which I was telling about the course, they were themselves convinced that, okay, yaar, agar ye aise bol raha hai, to he kind of likes this course. So he told me, okay. I mean, the thought process for me was that these are the five, six apprehensions that are there in my mind about this course. To the extent possible, let me get informed about what are happening over here. So apprehensions can be what would be my peer set, because again, I am doubtful, others are also doubtful. How are they looking at it? And obviously in MBA, a lot of your learning happens from peers, right? A lot of your learning happens from whom you're working with, etc., etc., etc. And I mean, then there's alumni. How much of support will the alumni get to this kind of this program? How much support will the college give to this program? And slowly and steadily, all of these three things, four things started getting convinced. For example, I remember there was one day in my mind, it was around mid of July, is like I was convinced ki chodo nahi karna, let it be. Let me apply one more year. I'll get to a more established kind of a course. Then I spoke, like, I mean, at that time we had WhatsApp or Telegram groups. I mean, our shortlist came out in April, right? But we had Telegram groups which were made beforehand only. So we used to speak with people. We used to just kind of do these small sessions here and there. Wherein I got to know about two or three like-minded people whom I actually looked up to them, who looked up there and look up a lot even now. Whenever I have anything professional, personal, I go to them. I spoke to these three people, Abhijit, Sham, and Yog. Okay. Spoke to Abhijit. He had a very good experience, 3 4 years of equity research experience. He'd work with people. And it's not the experience that came to me, the manner in which he explained me how he's looking at the course, the manner in which he was thinking. Then I spoke with Sham, who happens to be one of my uh, first people that I spoke to, again, how he was looking at the course, what was his mindset about the course. I spoke to Yog, his mindset about the course. So all of these three, four people, they convinced me, okay, at least if not anything, I have these four people with whom I can learn, right? So that was I think that gave me significant comfort, right? And then the second bit was placements that was there in my mind at that time. See, deep inside, I knew that if I build value for myself in the next 2 years to come, right? Today, the world values you for your or the knowledge that you bring in, right? So if you bring value to what to next 2 years, you identify these are things that are missing in you and you try to bridge those gaps. For example, I was not that aware about markets at that point of time. Obviously, I've studied things theoretically, but I did not invest avidly. So I thought, "Okay, let me use these 2 years to kind of go deeper into that." And then placements hota rahega. But then there was also comfort ki placements, would be taking care of college, etc. Also, I mean, but that was a shorter bit for me. I mean, I just had my mindset: would I be able to build myself for the next 2 years, and would the opportunity cost of me working in a job versus me kind of doing this MBA for 2 years be good? And also at that time, practically speaking, there was COVID. So I knew key activity in the market, things would not be next 1 year at least, things would not happen at a pace in which it was happening. I was working with Cube, so over the infrastructure investments were not going to happen because toll roads are not doing good, etc. So I knew, okay, let me just use these 2 years. And in the hindsight today, if I look at it, I think as I began my interview, uh, one of the two of the most fulfilling personal and professional years of my life. And I mean, and bucketing to PGP and PGP Finance, I mean, in my mind at least, there's no, I mean, the lines get blurred. If you're good, if you're helpful, if you're kind, people, you can make friends, you can learn, and you can at times also, help somebody learn uh, in a PGP and a PGP finance course. So, I mean, probably I'd also like to say that to anybody who's kind of applying to PGP finance today, having been through that cycle, having seen the corporate cycle, I think it's as good a course as any other course that is there, and obviously you get to learn nuanced things of finance as well.
Thank you so much, Keshav. I think with this template, at least me and a lot few others, I'm sure, would be willing to take much more risks with their lives. Thank you so much.
Times it helps, but ultimately, if you have your fundamentals intact, nothing changes, I feel.
Got it, got it. Thank you so much for this session, Keshav. I think it was a very enriching one. I'm sure we all have a lot of takeaways from this.